CBS News business analyst Jill Schlesinger joins us right now to discuss that and also the Fed's latest rate hike and what that means for everybody at home. Jill, good morning. How are you doing?
Doing well.
All right, so this is the fourth time the Federal Reserve has acted this year. Should we expect more increases soon?
Absolutely. We've got 3 more meetings through the end of the year, and at each of those meetings, we expect more rate hikes. Fed Chair Powell said so in his press conference. Right now, rates are at 2.25% to 2.5%, these short-term rates. I would suspect by the end of the year, we're at 3.5%. So we don't know the size, we don't know the timing, but there will be more hikes.
Okay, so should we see any relief? Could we see any relief soon with the raising prices?
Well, I think that we are actually going to see relief just in the next report. Already, oil prices are down. We were at over 120, and now we're at 95 to 100. Gas prices down 70 cents a gallon since the peak. Early reports right now, some food prices coming down, coffee, avocados, cooking oil. That could really show some relief in the coming months, but we'll still be at high prices for sure.
How will these higher rates impact people looking to borrow money?
This is rough. Yeah, sure. If you've got a short-term loan, like a credit card balance, an auto loan, maybe it's a small business loan, an adjustable rate mortgage, that's going to cost more money. But when it comes to longer rates, those are determined by the market. So when we look at mortgage rates have nearly doubled from a year ago, but that's actually because the market expects higher rates overall.
You mentioned Federal Reserve Chair Powell in yesterday's meeting. He actually said we're not in a recession, but, you know, we're looking at this and we're hearing about recession. It's almost like a buzzword now. Are we in a recession?
Well, I mean, look, we don't know because the way we determine recessions is this place called the National Bureau of Economic Research has something called the Dating Committee. They look at a lot of factors and they say, after the fact, here's when a recession began, here's where it ended. Here's what Powell's really worried about. He's saying everyone's talking about recession. It's getting ingrained. People are worried about inflation. We don't want it to become a self-fulfilling prophecy. And he's saying that it's sort of hard to square that we're in a recession if the labor market is still pretty solid. We've had 2.7 million jobs since the beginning of the year. Unemployment rate is at 3.6%. At the end of the day, it doesn't really matter, because I'll tell you what.
Well, it's a scary word, though.
It is, but I want to be clear. The economy is slowing down. That is what the Fed is trying to do.
Right.
The real tricky part is, are they going to slow it down too much that we actually contract or not? And even if we contract, if you have a job, you're going to feel good. And if you don't have a job, even if we're not in a recession, you're going to feel bad. Those are the 2 numbers I care about. Job, no job.
Keeping it real with Jill Schlesinger. Thank you.
Thank you.